We've already discussed this morning the banking sector and the way that weighed on sentiment yesterday. We've talked about the earnings story from tech and the way that looks as if it's going to lift sentiment in the US today. But there was also a data picture, a macro picture coming through in the US yesterday, and that was also being played out. How did you interpret what we heard, the data and the market reaction?
So the main two bits of data in terms of surprising yesterday was that new home sales was very, very strong, really kind of shattered estimates and the highest in a long period of time. And the other bit was that we missed on consumer confidence. It was the lowest since last July. What was interesting to me was the market reaction very much focused on the consumer confidence miss rather than the much bigger beat statistically on new home sales. And that's particularly interesting because consumer confidence is pretty much in line with where it was only in November. So while, yes, it was theoretically low since July, it was only 0.1 below the November reading. And I think that shows that the market out there, investors want to trade the narrative that the US is heading towards imminent recession. That's the thing that they're looking for confirmation of. So probably my biggest takeaway is it's very clear where the confirmation bias is in this market.
OK, so they want to trade the recession narrative. How does the news flow surrounding the banking sector factor into that then? Because as Valerie was pointing out, you pointed out to me earlier on in the show, we had, yes, First Republic, but also PacWest, and the stories there were pretty different. So
it plays into the fact that all we're talking about is First Republic. Those earnings came, 36 hours ago, or quite a long time ago, and yet still that's all we're talking about. Even in Asia this morning, most people weren't aware there were PacWest earnings. Now, I know First Republic has been more high profile generally, but it shows that people are kind of slightly cherry-picking the data that suits the idea that the US is really in a severe problem because of March's banking turmoil. I think it does have some lingering issues, but I think that the picture is much more nuanced. And those strong tech earnings really kind of show that it is nuanced. And that housing data will play into consumer confidence and through that wealth effect over time as well. So to me, the fact that the US is going into imminent recession is something that's still very much debatable.
And something else that's a bit more nuanced, and we've talked about this in the past, is the way that inflation data doesn't across the board miss or across the board beat in terms of where analysts had expected or economists had expected it to be. And we certainly saw that again once more with inflation. The inflation out of Australia, because the inflation there coming in pretty soft. Another example of data points we have to just take one at a time.
Well, the other reason this is interesting is because we've got RBA next week before the Fed. And so do they do a hawkish hold? Do they do a dovish hike? Do they do a dovish hold? That might kind of set some of the tone up for the Fed. So I think that inflation reading this morning was interesting because it changed the pricing for the RBA and hence the expectations for the Fed.